So today is just a couple days before the actual numbers come out. Numbers from Treb should be out, I would say, by the 4th or 6th of February. Probably early next week, we'll see what's going on. But I think we can probably make some predictions based on what we've been covering on a weekly basis. So I'm going to start out with the supply and demand like I normally look at on a week-over-week basis. When you look at what you're seeing on the screen right now, you can see that the number of listings and the number of sales kind of tapered off. So a lot of people were expecting that with the rate announcement and the fourth consecutive hold at 5%, that the market would be flooded with listings and transactions. What we can see here is that week over week, it's been a decline as far as the trend was concerned. And so we saw a uptick in the number of actual listings and the number of sales, but the last 2 weeks, they've kind of gone down a little bit. And so with what we're seeing right now, I don't know if you guys had a chance to take a look at my video, my reel today that I posted on Instagram. One of the properties shared by one of our agents, Kareem, it started out in the morning with something like 38 offers. When he sent it to me, it was 49 offers. By the end of everything, there was 85 offers on a property in Scarborough. And so anybody that's telling you that we're seeing multiple offers again, it is happening, and it's happening in a real way. So looking at these trends, number of listings have kind of started to plateau a little bit. Sales are just down a little bit. And I suspect that once these final numbers are reported, they'll kind of equalize as well. But we're not seeing an influx of inventory hitting the market. So you're not seeing too much inventory, you're not seeing too many sales, which means you're seeing stabilization. When supply and demand go in different directions, prices go either up or down. When they go up and down together, nothing really happens. And that's what I'm seeing in reviewing these numbers. Now, let's look at the average ask to sell ratio. So when you look at this chart, you can see that we kind of hit the bottom and we started going up the last 3 weeks. We've officially hit 1.0042, which tells us that most properties that sold in the past week sold either at asking or over asking. That's why it's over the 1 mark. And that's further substantiating what we're talking about in terms of multiple offers. So when you see stability, you see a shortage of supply, theoretically speaking. With this ratio on the up, it's probably predicting that we're going to see more and more multiple offers as time kind of goes on, because we're not seeing an influx of supply. Demand is still steady for most properties in the GTA for freehold, and it's inevitable when you have a shortage of supply and you have demand that's consistent but not overwhelming, that people will start bidding. And that's where you see these environments with 40, 50, 60, and in this case, 85 different offers. In terms of the average days on market, you can see like week over week, it's been consistently on the decline now. And anybody that hasn't attended one of these sessions in the past, I'll remind you that number of days on market is not used to calculate months of inventory. They're two different things that tell similar stories, but the metrics are different. 0 to 4 months of inventory is a seller's market. 5 to 6 months of inventory is a balanced market. 6+ months of inventory is a buyer's market. When you look at the data that I've extrapolated from the weekly analytics, you can see we're sitting at about 1.8 months of inventory right now, which tells you it's a very strong seller's market. And that's bolstered further on the fact that we're starting to see multiple offers again, and the ask to sell ratio is up. So all of these things kind of corroborate one another when we look at these data points. So average days on market right now, average property sitting on the market for about a month before it's disposed of. 1.8 months of inventory means that if no new listings were put on the market today, it would take 1.8 months to sell all the current existing inventory. That's the metric that we're looking at there. So between these two things, we can see that things are actually picking up quite substantially. Now, in terms of the average price, so we saw this kind of wobbling between 1.2, 1.3. And unfortunately, because I don't get exact numbers here, I can't predict what we're going to see. But year over year, if you take this data and we extrapolate it monthly, December we were at 1.3. If I take this and go 3 years, December we were 1.3. January last year, we were sitting at approximately 1.3. And based on what we're seeing here on a weekly basis, it looks like it's probably going to be very similar. These numbers will fill out, and by the first week of January, and Treb publishes their numbers, I suspect that we'll be either on par or just around where we were last year, which is very optimistic, because considering that we had 5 rate hikes, we had all this stuff happen in one of the worst years we've seen on the record, for properties to continue to maintain their value despite inflation and interest rates is quite interesting. And it only reaffirms that we are truly in a housing crisis. The 50 to 60,000 units that we're building every year and putting on the market is not enough to deal with the million people that immigrated to the country. For us to be considered the average of the G8 today, we would need to build 1.8 million homes, which we do not have the capacity to build. Doesn't matter what policies come into play. We don't have the electricians, the plumbers, the drywallers to actually build the homes that we need to deal with the current crisis. So it's not going to get much better. It's probably going to get worse. And with an election year coming up next year, it will be very interesting to see where things kind of shake out. Now, moving on into the condo segment of things, story isn't very different. We're not seeing as many sales. So the trends are a little bit different, but number of listings is also kind of looking like it's plateauing. So you're not seeing an influx of listings. People aren't rushing to the market. Buyers aren't theoretically rushing to the market either. Inventory continues to remain quite tight. Looking at this and looking at the same data points, the average ask to sell ratio on the condo side is just shy of that 1 mark, which means we're still seeing some deals happen on this market segment. In terms of average days on market, we're down now to 35. So this is also trending downwards. In terms of average sale price, it's been up and down and up and down. We're sitting at around 700,000. If you now look at the data that we've extrapolated for the condo side of things on a week over week basis, we're at 2.9 months of inventory. So 2.9 months of inventory again suggests that we're still in a seller's market for the condo side of things. Now, we know that interest rates, it's not a matter of whether they're coming down or going up. It's a matter of how long it's going to take before they start coming down. The inflation numbers at 3.4% that we saw last week, we know that in December, there was an uptick in travel and tourism and people were buying more cars. These are seasonal things, right? You've also got wage inflation. Based on the RBC, we're going to publish a news article for you guys today. You'll see, you'll have a flyer for it. Based on that, RBC is saying we're not talking about inflation now, we're talking about deflation. And so it's not a matter of the market in terms of interest rates going up or down. It's a matter of when they're going to come down. And most people are predicting May and June. And if we're already starting to see multiple offers now, anybody that's sitting on the fence thinking, oh, there's a further correction coming, or it looks like, I might wait 3 or 6 months before I buy, they're going to get slapped, is what I can tell you. Because based on what I'm seeing and what other agents are telling me at the office and these analytics are showing us, anybody that's waiting on the fence, now is the time to enter the market because there's still room. You can still negotiate and get a good deal. If you wait 3 to 6 months when the interest rates start coming down, everybody and their grandmother are going to be running to the market. And when that happens, we're back to the same story where it's going to be multiple offers, over asking, no due diligence. So anybody that's on the fence, my recommendation would be overpay on the rate now, pick a good product so you can refinance it in a year or two. But if you wait for the rates to come down like everybody else, you're in for a rude awakening. These prices are about to get lit. Like it's going to get crazy all of a sudden. So you guys need to be cognizant of what's happening. Anybody that didn't see my video, I'll play it for you here. And it may be a good idea for you guys to do something very similar. It didn't take me a whole lot of time to do this. I'll play this very quickly and I'll call it right after that. It is on Instagram. Here it is.
That crash? Are you still waiting for that crash? Take a look at this. It's the 29th of January, 2024. This property has 49 offers registered on it right now. Anybody I'm talking to right now that says that they're waiting for the market to correct further, this might be a rude awakening. Last week, I advised that for the 4th consecutive rate announcement, the rates were held again at 5%. RBC recently shared that we're not dealing with inflation anymore, we're dealing with deflation. The dialogue is no longer about if rates will come down, the question is when will rates come down? What I'm showing you here is the supply and demand. The gray is the number of listings, the blue is the number of sales. If you look at the last couple of weeks here at the far right-hand side, you can see that the number of listings is starting to plateau. Despite that rate announcement, number of sales has also kind of started tapering off, but there isn't anything material happening. People aren't rushing to the market right now. Now look at this. This is a metric for the ask to sell ratio. You can see that we're starting to creep upwards again, which indicates that we're seeing multiple offers and properties selling over asking again. If you are thinking about entering the market and you're waiting for a further correction, that may not be coming, and it appears that there's going to be a huge race and a flood of buyers entering this market. With the weather getting better and the days getting longer, if you're seriously considering buying or entering the market at this time, it's time for you to figure out your financing and proceed to talk to a real estate professional. Now, in my last video, I interviewed Omer from 6 Mortgages, where we talked about the 5-year fixed rate being the best rate. There's a number of products available right now and there's a ton of good deals that may be feasible. You may end up overpaying for the rate right now. Refinancing is always an option down the road, but if you miss that mark for you to purchase at a good price, you're probably going to be out again, dealing with multiple offers like I've shown you here. Ricky Rathore here again.
So I would encourage you guys to get some content out. Anybody that's sitting on the fence, this is your time. I think in a matter of, I would even say a couple of weeks, based on what I'm predicting, it's going to get pretty crazy. Now, one thing I do want to say, this is not typical in every market for every segment of property that we're dealing with. High-end luxury, it's a little bit different. Condo townhomes, it's a little bit different. That example that I shared with you from Kareem this morning was for a semi-detached in Scarborough, and that was listed at $750,000. So I don't know what the final price was. I'm willing to bet it was upwards of $1 million. But the point is that these properties that are a little bit cheaper, the entry-level homes as we call them, there is already fighting that we're seeing, and it only starts trickling upwards because as more and more people get pushed out of that, they either purchase the next bracket or they hold off. And anybody that's thinking of holding off is thinking, well, if I can't buy and I need to rent, rents are almost as expensive and you're paying somebody else's mortgage. All right, that's all I've got today. Anybody have anything to add or any questions? Okay, if not, guys, two things very quickly. I think tomorrow is the final day to RSVP for our event. I think there's 50 seats left. So if you haven't, please go into the Learning Suite, book your seat. You're not going to want to miss this one. Secondly, this Thursday, for those of you that are watching what's happening in our training, I have a certified litigation specialist. He's a deputy judge at the small claims court with over 25 years of experience coming in to the office for a live session. It's one of 3 sessions we booked exclusively with his office that I'm really excited for. If you are able to attend in person, I would highly recommend it. This Thursday, 6 o'clock. If you can't, we're going to get it out on Zoom. I'm not sure if we're going to be able to record it, but you're not going to want to miss this session and the 2 that are going to follow that. I will see you guys later. Take care, everybody. Bye for now.